well as in the engineering segment. The company has also announced expansion for their packaging film segment. To discuss this, what's the outlook for the year? We're joined by Mr. Rajesh Bhatia on the show. Hi, Mr. Bhatia. Thanks so much for joining in. Give us a couple of details, sir. You know, your results were good, but I wanted to understand what is your current utilization levels, given the fact that you've announced a capex, and what is the debt in your books? How do you fund this? It's close to around 950 to around 1,000 crores.
Okay, so Nigel, thanks for having me. And this capex that we've announced, it's only for the packaging films, BOPET, as well as the CPP facility. And we are getting into this investment after a gap of 16 years on the packaging film side. So the current capacities have now been more than the capacity utilization has been 100 and above for the last so many years. But because we were doing expansion in our overseas business and we were consolidating our aseptic packaging investments, so I think now is the right time. And this FY21 we'll see a huge increase in EBITDA from the previous year's levels, and FY22 onwards, next couple of years, we at least looking at about 25% kind of a growth, given that a whole lot of capacities have come on stream. So that's where we thought that let's expand this capacity, because we were woefully short on our packaging film capacity in India.
No, we get that point. 25% growth is what you're seeing. The capacity increases by 25%, is it?
So what I'm saying is the volumes growth as these overseas plants get commissioned on a quarter-to-quarter basis for the next at least couple of years, we'll see that kind of a growth in our volumes.
What we're trying to get from you, Mr. Bhatia, here is that your current capacity in the plants that you've announced expansion in, how much does that increase to? And more importantly, where do you get this money from? How much money are you looking to invest in this capex?
So the overseas part of the capex is all complete, and with completion of all of this, we are sitting on a term debt of about 3,300 crores as on 31st of December. So that completes my whole expansion in Poland, in Hungary, Russia, Nigeria. So whatever we needed to do there, it's all been completed now. And now the current round of expansion, about 850 crores, what we're going to spend in India, and a small facility of CPP in Dubai, where we're going to invest about $15 million, that is what is on horizon for the next couple of years. Aseptic packaging, as I've been saying earlier, that that part of the business has done exceedingly well this year. And we looked at capacity utilization almost close to 100% therein. So for the next season, which starts in January of 2022, we will definitely have to look at the additional capacity helping us and ramping us.
Okay. So, Mr. Bhatia, with the current capacity that you have for FY22, you're saying that, which you've commissioned in Hungary and the other plants, you'll be able to do a 20-25% volume growth. Is that correct for FY22?
Absolutely.
And give us a guidance in terms of your aseptic packaging division. What kind of revenues will it do for this year? And for the next year, that's FY22, since you're saying that you're at optimum utilization levels, which will be music to the ears of your investors, because they've been waiting for this, what kind of a revenue will it do in FY22?
FY22 for the aseptic packaging, forgetting the new line that which is going to be ready by December of this year, I think we will have close to about 500 crore of the top line. And, we have healthy EBITDA margins over there in excess of, in the north of 20%. So, that business is, and FY23 and onwards, next couple of years, whatever capacity, we are doubling from 3.5 billion packs to about 7 billion packs. We should look at, utilizing that fully, because and as I said that, FY 2021 was a bit of a setback for this particular segment because of the pandemic. But now I think it's over. And as I said, that January onwards, we've looked at close to about 100% utilization.
Just a quick follow-up, Mr. Bhatia. This 4,000 crore entire capex that you've announced in India, overseas, and the other Dubai plant that you're talking about. Roughly, what is the sort of asset turns that one can assume you would make in this?
I think in the packaging industry, the norm is about the capital turnover is close to one. Like, 850 crore that we're going to spend now in India will give us a top line of about 825 to 850 crore levels with an current EBITDA margins of about current EBITDA margins are, of course, much, much higher, but we looking at rationalizing them. So as I said that, the current margins that, the industry has been enjoying because the capacity utilization levels have been ramping up across the industry will come in for a bit of a check in the next couple of years. But by the time the volumes will kick in to, compensate for that.
Take that point. Thanks a lot, Mr. Bhatia, for joining in. Margins may come off, but increasing capacity and increasing volumes may more than offset that. The stock under a tad bit of pressure, but remember, it has seen a big rally in the past. With that, we're out of time on this edition of Chartbusters. You stayed into CNBC TV 18. Trading Hour comes up next.